BHEL, which is also the focus for today, and I'm joined by my colleague Mihika to tell us about how the numbers were for the fourth quarter and what's the management commentary, what's the outlook like for the company.
Yes, so the Q4 earnings were disappointing ones. Revenue was marginally up 0.4%. The key number was the EBITDA, which was down 30.6%, and this was mainly due to higher other expenses that stood at 527 crores versus 58 crores a year ago. Margins contracted 400 basis points, and net profit fell 25.6%. When you talk about the con call highlights, now the order book of the company stands at 1.31 lakh crores, and around 92,000 crores of these orders were from the power sector and rest from the industrial sector. Now, gross margins were down due to supply chain issues and execution delays, according to the company, but they are targeting a 12 to 15% CAGR growth in terms of revenue. And they also mentioned that the government is planning to add 88 gigawatts of power by 2032, and the company is expecting 10 to 12 gigawatts orders from there. When you talk about the brokerages, a mixed bag. Now we have Morgan Stanley, which is retail and equal weight rating at a target of 220 rupees, which is a 31% downside. Q4 FY24 revenues and margins were below their estimates, but they do expect order momentum to continue given the policymaker focus on adding thermal capacity. They do believe that earnings visibility is improving with healthy prospect pipeline. We have Nuvama, which has retained a buy at a target of 400 rupees, which implies a 25% upside. They've mentioned healthy outlook given a 25 gigawatt of thermal total addressable market spread over the next 2-3 years. They've also implied that the old legacy projects expected to be completed by FY25 end. And lastly, they've estimated an EPS CAGR of 88% over FY25 and FY27.
All right, thank you, Mihika, for that. On that note, let me introduce you to the guests for today. We have Lancelot Dicuna, CIO, ValueX Wealth Connect, joining in along with Vaishali Parekh from Prabhudas Leeladhar. Thank you so much for joining in today. Lancelot, I'm going to come to you first on BHEL. You saw the management commentary as well, and there is some concern around the execution of orders. And even though there is this positive outlook that the government is going to continue putting in money into the space, but the execution part of it seems like a concern, and especially with a long gestation period, right? What's your long-term view on something like a BHEL?
So I think, whenever you look at the future of the company and its growth prospects, you also have to look at what is the price that you're investing in that company. And if you consider that valuations, while there will be earnings growth going forward, it is trading at a very high multiple at this point in time. So unless the profitability can significantly improve, it's very difficult to justify, investment at a high multiple as it is at this point in time. So yes, there is no doubt that the company is going to get further orders. Execution capabilities may improve a bit. There has been some short-term disappointment on that front. The question is that, if the valuation is high, is this, it's better to wait out and, wait for a significant correction in the price before the valuations. When the valuations become attractive, then one can look at investing in the stock.